The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, there's been so much talk about what has been happening in the cattle industry this week that Thursday's grain trade might have got lost in the shuffle a little bit. It was actually a really positive day to the upside across corn, soybean, and wheat futures. Let's talk about that and take a look at what's happening in this market trade to close out the week. Brian Doherty, Senior Market Advisor with Total Farm Marketing, joining us here today on the show. Brian, good to catch up with you again. And I made the comment to you before we went on. It's felt like I've been drinking from a fire hose this week with the amount of stuff that is out there and market-related items. But, you know, here we are Thursday. Really nice day across the grain trade, Brian.
Really nice day, and probably the most impressive chart, though we don't talk about it much, might be the wheat chart. So we like the rally in beans. That looks impressive. That's 40 cents now in a very short window of time. There was some rumor, but I got to put it out there that China may have purchased some U.S. beans. No evidence of that yet. But beans closing 10 to 12 higher, that's something, right? Corn up a nickel, but wheat really solid gains today. And the reason I say that chart might look the most impressive, it broke what I call a near-term downward channel line, which is if you connect the previous three highs, there's a line there, and the market broke through that. It got above the 21-day moving average. More importantly, bullish key reversal posted on many of the charts when the contract low was established at mid-month. And so you kind of hold your breath and see what's going to happen where the market rallied up, then it set back a little bit, and now it punched higher today. So good technical day in wheat, likely some short covering there. I couldn't find any evidence it's related to anything fundamental, like a really bad weather event expected, but maybe there's something out there I'm missing. But good technical day. Love the bean market right now. Export inspection start of the week, really strong for soybeans. I think continued talk with customers has me and maybe others of the opinion that the USDA last yield projection is too high. You've got a nice looking technical picture now, broke some overhead resistance, ran through some critical moving averages, uncovered buy stop orders, and you got a good punch higher this week with prices closing at their highest level in a little over a month and getting closer to a near-term high that they did back in mid-September. And then corn, don't forget corn in the crowd, 5 higher. That looks pretty impressive. Still within its range. But I got to tell you, that 428 area, the market closed there today. Boy, nice to see it close above the Bollinger Band. And we're approaching the high there, too, for mid-September. 431 and a quarter. Now we're only 3 cents from that. And there's a little gap on the chart left at 432 and 3/4. So a lot of technical stuff we can talk about, but a really nice chart looking chart in that corner with the two now inverted head and shoulders that when I read those suggest the market could go higher.
I'll hone in on the wheat a little more with you because I think that's something that I've heard many folks talk about. Wheat could be the leader here. You know, could wheat help pull quarter beans higher, et cetera? But I think about the move in crude oil on Thursday. You know, we were up 4 or 5%. You got these Russian sanctions that have been put out there, things of that nature. I just wonder if maybe there's some linkage between crude and wheat, Brian, if maybe that's something that's helping out this wheat complex try to punch out here a little bit, so to say.
Well, let's look at a couple of things. One, both good value compared to where they've been for some time. So crude oil got down to its lowest levels here this past week. Gosh, you got to go back. I'm just going to run a chart here real quick. You got to go back last spring when we had a kind of a spike down. So good value relative to something, relative to price all summer. Wheat, just a good value. The world's got enough wheat, but there's exportable countries. You know, we've argued this for a year and a half that exportable countries are pretty slim. Those numbers edged up a little bit, but they're still pretty slim. So the market sometimes doesn't pay attention until it needs to pay attention. Maybe it's trying to pay attention a little bit more. I would like to make the argument, though, if we look back historically, when we get bigger rallies in the marketplace, you usually got to have that strength of wheat helping to push the others higher. It's a world crop, and when the market starts to chase a world crop, things move in the other crops as well. And it's got wheat's been a dog. It's been pulling the other markets down for quite some time. So really nice to see. I don't know if it is the leader, but if you're going to get a bull run in row crop commodities, you got to have wheat. I just, to my words, you've got to have wheat in participation or leading.
Well, and we think about the correlations between wheat and corn. We can talk a little more on the technical picture in the corn market. And something I noticed here this morning, just looking at a Dees corn chart. I mean, from the early year high to where we're at the close on Thursday, 428 futures. I mean, we've really been in a fairly, I would say, a fairly narrow range all year long here, Brian. And it's just something that we have our daily ebbs and flows and this and that. But really, I mean, corn's kind of just been trucking along here for the last 10 months, it seems.
Well, it's had nothing but negative news to correlate to that trucking along, and yet it's been trucking along in a sideways pattern. So you look at the big increase in acreage, right? And you look at the big increase on yield on projected USDA numbers, and then you look at record production, second crop safrinha corn out of Argentina. It's just been one, or out of Brazil. It's been one thing out of the other. I did make the correlation before in the last questions. I'm going to swing back to that crude oil, wheat, these are a basket of commodities. So what I like about the potential I'm seeing here today, and I'm outguessing this a little bit, is you've got money flow buying commodities and buying commodities that bring that value. And that's the point I meant to make. You got year low crude oil prices, money comes in. We think money comes in. Of course, there's sanctions and other things behind it, but that triggers the money flow. That says when. Um, so like to think that wheat can move up. Corn, soybeans, boy, they've been in a sideways range, right? So likely a scenario with big crops is we stay in that range. But if that spring gets compressed like it has in wheat, if there'd be something to make that spring sort of uncoil, there is a lot of buying that can come in. And so there's buying in the form of value buying. I've just talked about that. Good value, end users buy, speculators buy, not a lot of risk to own futures contracts if you've got the money to hold it. So there's that type of buying. End user buying, speculative buying, market starts to move up, hits buy stop orders. That's people generally exiting short positions in the market, Jesse, or establishing new positions, or both. I call that unintended purchases. Then you got margin calls that add up on shorts. They just get out. That's an unintended buy. And then you've got sometimes you trigger above certain levels that create offensive buying once you start moving through some moving averages. So you get a lot of buys that can kind of come in at one time. When you have an extended long-term trend, those things sometimes compel each other to push the market significantly higher in a short period of time. So I know I'm talking a little bit wishful here, but the setup is there. There just needs to be usually a catalyst or two.
Well, and to add to that thought, one day doesn't make a trend, but obviously a really good technical day on Thursday. And I'll say this as well. I know we talked a bit about basis last week, and farmers, I'd say, have done a very, very good job of finding ways to store grain here off the combine. Maybe a better job than some folks thought they would do here with these price levels. And so, starting to see some basis improvement and getting a good technical day here in the futures, things of that nature. It just makes me wonder if this is going to lead to at least some sort of a opportunity for producers here in the weeks ahead, Brian.
Well, we sure hope there's some follow through. And we saw that last year. We saw the managed money look at corn as a good value to own. They continued to buy, and that pushed prices higher last year into the early winter months. They never really blew up, but it was a nice steady recovery from almost the same pattern that we have this year, sub $4 to eventually to the $5 area. And so that's fingers crossed where the market's headed. To your point, if farmers have kind of tucked it away, and in particular this time of year, once they get done with all that work in fall, they are not taking it out of storage unless there's a reward for it. And That is to either come in basis, futures, that is the market moving up in general, or both. The thing is that we still need to keep our marketing pencil sharp. So can you be optimistic? But I mentioned some chart formations. They have some upside targets. My word today would be to encourage producers to look at some of those points on the chart and to start maybe setting some. They can be small orders, but getting some orders in to sell, getting the ball rolling, generating some cash flow. It could be delivered later. You got carry in the market. In particular, those who've had a really good crop, because some have some really good yield that when you kind of pencil that all out, it's going to be an okay year. It's not going to be a train wreck, especially if they can sell some on a rally.
We're having a conversation today with Brian Doherty, Senior Market Advisor at Total Farm Marketing here on Market Talk. Brian, let's go to livestock trade, and we don't have to spend a whole lot of time in cattle. I have talked a lot about the cattle market ad nauseum in the last 48 hours, but just general thoughts you have. I know a lot of turmoil there this week and a lot of dust that has not settled. We had a mixed day in live cattle. We were under a little more pressure in feeders on the day Thursday. Any thoughts in general for you just looking across this cattle complex this week?
Yeah, several. I got some high level type thoughts. First of all, today ended with live cattle futures bull spreading. That means buying the front months, selling the back months. So we saw those spreads come into play. A case in point, December up $1.35, 241.17. And pick a month, down 15 in June, 232.75. Or you could go to next December, down 7. Not big days down, but on the day, front months reflecting what should be firmer cash, and we'll probably get more news of that today or tomorrow. The interesting thing is here, this last surge we've had in prices, because we don't have the cumulative traders report, it was thought that the funds went strongly on the offensive. They pushed the market higher. That's what I'd call that acceleration. Some bull markets, sometimes, you just can't believe them go higher, and then it even goes a lot higher, right? So you get that acceleration, all those unintended buys. But then something comes along, whether it's the administration announcing they've got a plan for the future, or if you look kind of between the bullish lines in those stories, the cutout values are not trading where they were prior to that rally. They're still firm, but they're not $400 on the choice. So can the rally sustain itself without the cutouts leading the way up? So tight supplies will continue to underpin the market. It's a technical correction. The administration, certainly, I think the signal is, look, we're acknowledging this. We've got some plans and ideas, but none of that's a quick fix. You and I know that. This took decades to get to this point. It's going to take a long time to build a herd. And then you got to create an incentive. If you're going to build a herd, are you cutting your own throat, right? It's for the producer. Mm-hmm. So a lot of moving parts, and in a strange, as you and I've talked about, kind of a strange economic environment where 3 years ago, droughty conditions, $8 corn, there was herd contraction for various reasons. I'm going to say the older guys, I'm getting to be one of those, said enough, right? Those that stuck around making good money, cow-calf operators in particular, but looking at this and going, do I, at age, whatever, 60 something, do I reinvest in this and take all this risk? And how do I manage that risk? So the administration's talking about risk tools. I don't know what that looks like right now. Probably some type of insurance, but nothing's free and nothing's guaranteed. And so the odd economic model is that high prices are not leading to necessarily expansion. They're leading to potential contraction because of the demographics behind it. That's my opinion. Yeah.
Well, good thoughts. And I'll just make mention, you brought up cutouts, kind of that 372 range on choice, select 354 on Thursday, and a little bit of cash activity. some 238 live bids, 370 dressed in eastern Nebraska showing up as of us talking here. So we'll see how some of that trades throughout the rest of the week. How about the dairy complex? Looked like maybe some decent trading volume in butter. What are we seeing there? Class 3 milk, et cetera, Brian.
Yeah, et cetera. So you've got the back months, and I'm going to call the back months starting with December, Jan, all 20 was 16 or sub $16 milk this week. But buyers came in and bought today. We had some nice push higher, 22, 29, 23 higher respectively on the November, December, January contracts, trying to signal that maybe they've just gone low enough. And then the market attention, again, getting back to the value proposition. My goodness, what good value for what a gift to processors in front of the holiday season, right? You drive this value down, drive butter down, drive everything down, and now it's a really good value, right? Well, there's two reasons. One, the herd expansion has continued gradually and slowly, but we've talked about concerns that the economy could turn south. There's no sign the economy is turning south, or no strong signs. So it created an environment where really good value to processors. The question is, can this market gain traction and really, get that unintended buys, short covering, buy stops triggered, all of these things that we talked about earlier? That to me is a tail task. And I look at like the January contract consolidating, but running into resistance at a 10 or 20-day moving average. I did like what I saw in November today of 22, 17, 36. That leaves the back months at a pretty big discrepancy and room to move up. But we've got to see this demand market come in full force and kind of give it a 1-2 punch to get markets back to where they were. That being said, I look at the November contract today, hit a high of 1755. The most recent high in the last 3 months is 1767. So getting back close to areas that are getting a little bit more, what I'd say, in tune to respectability given the supplies and something to defend.
Brian, any final thoughts you would share or reiterate with folks here on the show this week?
Yeah, we talked. I coined that phrase: "Marketing never takes a day off." And to your point, look like things are going to be kind of calm. Maybe some, and all of a sudden you get all this news from the cattle market, and then you get a good upturn in the grains today. Um, I want to compliment you on what you said there about farmers finding a home for the corn or figuring out right how not to sell aggressively right now. And I think that's helped provided that basis bump and whatnot. But that would be the thing I would tell you: watch most closely, or make the phone calls, get on the list. If there's a flash buy, hope that you're the guy that gets the 6 cent basis improvement, but keep working that. Typically, if we do get a futures price recovery, you don't see the cash market follow, so the basis winds out. So you see futures rally 10 cents in corn and cash rallies 5. Um, that would be my advice. Now is time to keep, make the phone calls, keep a close eye on this cash. The end user certainly is going to continue to buy every day, every week. I don't know if they've been compelled yet to look at this and go, I better book a lot. I don't think so. I don't think there's enough pain there to create that action. But that'll come if there's more upswing here. They'll take notice. But for right now, you got to still scratch and claw corn farmers, soybean farmers, wheat for every nickel and dime. So work those angles. That's just the job for you to do now. Once harvest winds down, is work the angles.
Brian, if folks want to reach out, talk with you, have a conversation there at Total Farm Marketing, how can they reach you?
Best with a phone call. Our number is 800-334-9779, Jesse. So that would be my first ask. Give us a call. Let's talk about it. Sometimes our chit chats are 2 minutes. Sometimes they can be 22, but we'll get down to the bones of business and listen to you and get to what's important. Otherwise, just shoot me an email, Brian with a Y. So BRYAN at totalfarmmarketing.com, or check out our website, totalfarmmarketing.com. Would love to have that one-on-one though.
Brian Doherty, Senior Market Advisor at Total Farm Marketing. Always a pleasure. Thanks for joining us again on Market Talk. Have a great weekend, Brian. We'll talk to you next week.
Thank you, Jesse. You do an excellent job, and my pleasure. Have a great day.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.